Hey, it's Mason from Mason's FOREX Trading and Investments. Please take note of the risk disclaimer. Everything provided in the video is strictly for educational purposes. Please also hit the subscribe button, like and share the video with your friends and your family. Content to be covered for today: introduction, requirements and the detailed processes for developing an easy strategy for Nasdaq 100, the estimated returns for the strategy, and a quick fire summary. Introduction. Are you looking to learn how to properly develop a strategy step by step? Do you want to understand how to get your potential returns on your strategy? Do you want to create your own powerful signals? Are you looking for easy tools to filter out unnecessary trades to potentially increase your profit yield? Are you hungry for confidence in trading the Nasdaq 100 by knowing the numbers or performance of a strategy? Are you looking for an absolutely easy technique or method to simplify your life? Then this video is just for you. What are the requirements for developing this easy strategy? Number 1. Finding a pattern or candlestick formation for potential entry or signal. We will look for a specific candlestick formation consistently and then use it for our entry signal. We also know that consistency is key to anything in life. We must execute all the specific trades with the rules that will follow. Here we have some examples of bullish signals. The above candlestick patterns will be used for bullish or buy signals. If the market goes in an upward direction, we normally buy. In the market, we will look for similar patterns or close enough to what is shown in figure 1. Here we have we have a live example from the market. Our general rule for today will be a minimum of 2 candle pullback. As you can see, this is one candle. This is another candle. Both form a 2 candle pullback. If you look at the structure of a trend, price normally pushes up, it retraces, and then price moves higher. Again, this is known as your retracement move, or E for pullback. So we do have an entry signal. As you can see, these 3 candles represent something similar to our bullish signal right here. In terms of setting a stop loss, we will be using an ATR stop loss from the low or from the wick of this blue candle right here with an X. Here's another example from the market of Nasdaq 100. We now have an entry signal. In our case, we have a 4 candle pullback. You can see it's 1, 2, 3, and this is the 4th candle. Just by looking at these 2 candles, you can see we have something similar to our bullish entry right here. Again, the stop loss will be used 1 ATR from the wick of this candle X. Let's look at another example. Again, this is known as our retracement move in yellow, followed by an engulfing bar. If you look at these 3 candles, you can see it looks similar to our signals right there. Again, we're going to have our entry based on the blue candle here, X. And our stop loss will be 1 ATR from the wick of the lowest candle. Let's move on further. We have a monthly chart shown here. As you can notice, price is moving in a strong upward trend. Each candle represents 1 month of price movement. We are using this chart just to get a higher time frame perspective from the market. In our case, we will only favor the buy opportunities or favor the upside. We are looking to simplify our technique or strategy, and buying only complements this. So we're now on US Tech daily chart. We have an entry signal here. So we have a minimum of 2 candle pullback. You can see it here. 2 sell candles. Call them X and Y. It's actually followed by a 1 candle pullback. So that will be not applicable. We also have another 1 candle pullback. We now have a 2 candle pullback followed by engulfing bar. E for engulfing. So that will form an entry for us. Here we have a 1 candle pullback. Unfortunately, it won't be our entry signal. And then we follow it up with a 4 candle pullback, which is definitely an entry. As mentioned, the red candles are known as pullbacks, retracements, or sellers are stepping in for this uptrend. This is a daily chart, and each candle represents 1 day of price movement. 1 candle pullback, not to be used for our specific strategy, as mentioned. 2 candle pullback, perfect potential entry signal. 4 candle pullback, perfect potential entry signal. Again, it will be a minimum of 2 candles, very important to note, as a pullback, or until we have 2 candles or 2 sell candles formed on this daily chart. If there are none, we will ignore the setup or entry. This is done so that we can filter out any trades. We're also creating specific rules for entry, which allows for consistency. We don't want to be trading anything and everything, as there is no trading edge, trading everything. More often than not, the 2 candle pullback offers a favorable area for stop loss placement. Number 2, the ATR tool for stop loss placement. We will use this tool known as the average true range. It's a free tool. This is no magic tool by any chance, and it will be used so that we consistently set a stop loss based on the ATR value. The ATR is an indicator tool that picks up volatility in the market. We will use the 14-day period ATR. The 14-day period ATR gives us the average volatility for the previous 14 days. Here's some other examples on how to use the stop loss and ATR tool. Number 3, the take profit placement. In this case, we will be risking, for example, $1 to make a $1 reward at minimum. We will close the trade once we make a profit equal to the stop loss value. In our case, the risk to reward ratio is known as 1:1. Number 4, selection of a moving average. We will use the 100 period exponential moving average to filter out any trades which close lower than this EMA. All entries must be made only when the entry signal closes above this EMA. Since this is a strong uptrend, we will use this tool to filter out potential sell trades. This EMA is also selected based on the candlesticks or price spending more time above this EMA. To be explained full, so don't worry. Here we have the Nasdaq daily chart. Can you see our entry? Price gives us an indication. We have a large retracement move right here, followed by a candlestick wick and a blue bar, followed by another blue bar which closes above this 100 period moving average. So we now can see that the bulls are stepping in or potentially stepping in. So we have our entry signal, we have a wick, and we use the wick for a stop loss placement, 1 ATR. In our case, the ATR value is approximately 203.1, shown right here, which equates to 2003.1 pips. Take note, this is a daily chart and it has a lot of volatility. 1 ATR is equal to 2003.1 pips. Here we have a total risk of approximately, or rather, for an example of $1, and our objective is to make another dollar. So our risk to reward ratio is 1:1. Number 5, risk management. My Forex broker functions for Nasdaq 100 as follows. For a 500 pip stop loss with a lot size of 0.01, I could potentially lose 0.50 USD. This excludes spread costs, as that figure is usually a very tiny amount from my broker. You can easily get your stop loss information on your demo account. Open a trade 0.01 lot size on demo and place a 500 pip stop loss, and you will get the stop loss value in terms of money. You must manage your risk as per your own discretion or based on what you are comfortable losing. I normally keep my risk around 2 to 3% per each trade. 98% of what you have seen on social media or on the internet are over leveraged positions. Most mentors or people are trying to gamble by opening higher lot sizes, trade without stop losses, or have very high risks for each trade. This eventually leads to the account being completely blown or they lose everything. In my case, I only trade Nasdaq 100 with my specific broker. This means that I only open Nasdaq positions with my broker. This makes things a lot easier for me. If I open 3 positions with a lot size of 0.01, and let's say that the stop loss is about 1,000 pips or $1. If I had to lose 3 positions in a row, with each having a 1,000 pip stop loss, I would lose $3. Knowing the above numbers helps with risk management. If we risk too much, we create additional anxiety and stress, and our account or money will shrink faster. Knowing the numbers again is very important. Make sure you are able to manage and handle your risk. Kindly consult a professional financial advisor. Make sure that you follow and develop your own trading plan and you use it absolutely consistent. So here's an example from my broker. If you can look at this image, you'll see for a 500 pip stop loss, it tells us profit minus 0.50 USD. So you can see SL here, stop loss, and TP, take profit. You can see I entered on this green line and the distance here to this distance, we could say I could potentially earn $1 and USD, and I could lose $1 for a 1,000 pip stop loss. In our case, this is a 50 cents stop loss. So if I had to get a risk to reward of 1:1, my take profit would be 0.50 based on our example. Place your mouse pointer over the red SL line to get your monetary value on the MetaTrader 4 software. Number 6. Important information to understand when you test the strategy on your own platform. Your broker functions differently to the broker we will be using today. Please don't expect to get identical results as per the return information. Stay on your demo account for as long as possible. Minimum of 2 years would be extremely beneficial. Keep testing, simulating, implementing, improving, reading trading books, work on your self-development, psychology, etc. Remember, we are going to war against other hedge funds and big banks in the forex trading market, stock market, etc. The market makers are there to take our money, and we must be fully prepared to be in this highly competitive market. There will never ever be quick money, even though you saw the Ferrari, the Lamborghini, the houses, the massive profits. So let's go to TradingView. We are now on TradingView. I have been using the free TradingView version for about 4 years. If you go to the left hand side, we have prediction and measurement tools. In our case, I want to show you price range and how to use it. You simply place it on the TradingView platform and you click it and you pull it down, and you can see we have a figure in our case which is 4813. Minus 4813 actually represents 4,813 pips. So you can accurately measure your pip value. Now if you go back to the left hand side, you will see we have a long position tool. I simply place it on the chart by clicking it, and in our case we have a target, a risk to reward ratio of 1, and if you notice in the middle we have a value of 5571. This value represents 5,571 pips on the Nasdaq 100, and we can also adjust it. Let's assume we want to use a risk reward ratio of 2. This simply means we're going to risk $1 and we're going to make $2.06 based on how we have set the platform, or set the tool rather. Now what I want to do is, if you remember from my broker, we said that my broker for 500 pips we could potentially lose 0.50 USD. Now in our case, if you look at the value 5571, it's going to carry a dollar value of approximately 5.5 USD based on my broker. So this figure, or the way we determine this figure, will actually be used in our table. I will show you the profit table or the return table soon. Now, if you're wondering how did I get approximately 5.5 USD as my potential profit or loss, remember 1000 pips is actually $1 in value. So if it's 5,000, or let's say it was 5,000 oops, it would be equal to 5 USD. So in the return table, this will be very applicable. In our case, I used a vertical line. A green vertical line simply means the trade went in our favor, and a red vertical line means the trade went against us. In our case, I have completed 3 years of data. So I've completed 2021, 2020 and 2019. Get our potential returns based on the specific strategy that I've thought or shown you in the previous slides. Let us go to January of 2021 using our strategy. So using this TradingView platform, we'll be able to get our returns. If you're looking for an alternative way, I'll leave a link in the description box for the other free simulating or testing tool. We have a 2 candle pullback. So you can see price pushes up, it retraces with 1 candle. So we're not interested in that setup, so we ignore. We push up higher. We have some sort of congestion in this zone or this area, and then price pushes up again. We're not in this part here, we're not interested, and then price reaches this point and it gives us a 2 candle pullback and it pushes higher. So we already have our entry. You can see from the notes, this forms an engulfing bar. We're just going to call it E for now. And our stop loss will be, we'll be using this measurement tool. You can see it's already placed here. Now to get our ATR value, we need a cross. If you place your cross in line with the candlestick, you'll see our ATR value is approximately 221.3. You can go, you shift your mouse lower to the graph of the ATR and you look to the right hand side, you'll see the value is 220.9. That's an approximate value. Or you can actually get the value on the left hand side. If you look at here, when we hover our mouse on the candle, this TradingView platform gives us the exact value. So now if you look into the left hand side, you'll see the value is 221.3. In our case, I simply use the tool. Again, as you know, the ATR, one ATR value is 228.4. It then becomes 2284. Oops. So this is just an approximate value. And our stop loss will be from the wick of the candle, of this candle, known as a rejection bar. We call it a type of rejection bar. This will be our stop loss. That's how we set it. This will be our R for risk, and this will be our reward. So you can see on TradingView, this tool gives us a nice green color for our reward and a red color for our risk. Let's do another example. So we can see price pushed up and it retraced. Again, we have about 4 candles for a retracement, depending how you look at it. It could actually be 2, because if you look at there is congestion here. So we have this candle 1 and then this candle 2. So it will depend how you look at it. But this move is definitely, the whole move will be called the retracement move. Now in our case, we have this buyer followed by this buyer followed by a higher bar. Let me try it for you here. Looks something like this. This represents these three candles here, very similar to our bullish signals as shown in the past. We're going to do exactly the same. We're going to select an ATR. We go to the candle that we wish to enter on. This is our entry. You'll see the value is 192 on your left hand side from the ATR. You can simply go to the graph and you can see it's approximately 192.8. Then you take this measurement tool and quickly place it approximately 192. You simply shift this tool in the blue to approximately 192. You can also go to the settings. If you go to the settings, you'll be able to manually or precisely take this value to 192. Again, we enter the close of this candle. E for entry. One ATR as the stop loss. You can see our risk to reward ratio is 1. We're going to risk $4.98 to make approximately, or rather we're going to risk $4.9 to make $4.9. In the previous case, we risked $6.5 to make $6.5 based on my broker data. You can actually see it, 6.535. that's approximately $6.5 that we could lose if the trade went against us. And we know in our case we're going to make approximately $6.5 because price eventually hits our take profit around this candlestick formation here. Now we have a loss. On the 1st of February 2021, we take our first loss. Price pushes up and it retraces. We have a 2-candle pullback and then followed by a engulfing candle. This candle is E for engulf. We will definitely enter at this point because it meets our requirements. Also take note, we are above the black moving average on the 100 moving average, so that's also another requirement. You can see in our case we unfortunately lose 7.5 USD. We could have actually potentially made $7.5, but the market went against us. You can see price pushes up. Unfortunately, it doesn't our take profit, it misses it, and then eventually price comes all the way down and it takes us out at this price level. This price level is approximately, you hover your mouse, you'll see 12,513.5. we get hit out or we get taken out of this trade. We take another loss. Again, the red vertical line represents a loss. So price pushes up, it retraces. So we said we need a minimum of 2 candles. We have more than enough here. Then eventually we get a nice rejection bar, which is this one here, followed by an engulfing bar. E for engulfing bar. So this becomes our entry here. You can see we have 8.614 as a potential loss, and we do take this loss. Now potential reward 8612, so that's 8,612 pips. Unfortunately, we get tapped out. You can again use the tool to measure your ATR or stop loss rather. You hover onto this candle here and it gives you the value of 291.9, and then you can actually set your ATR stop loss, which is about, you can see, about 291. I'm trying to keep the video short as possible so you can actually go yourself and get these values precisely. So what happens, we mentioned that price pushes lower, it retraces, pushes lower, we push lower, retrace, push lower, we retrace, push lower, we retrace a bit, and then we come to a potential entry with an engulfing bar. In this case, this is E for engulfing bar. We've mentioned that this candlestick or this entry signal must be above our 100 period moving average, which is, you can see it here, I actually mark it for you. Same rule as before, we take our tool, okay, wrong tool, we take this tool, we shift it or move it, get that out of the way. So we said the ATR value here is approximately we can use this candle as our low. So if you're wondering, we could use this candle as our stop placement. We're going to use this candle as a stop loss. We could have actually used this candle, but since this candle, let's call it X, candle X wick is somewhere around here, and then this candle wick is higher, so we can use approximately, we use this candle for setting our stop loss, since we have a type of 3-bar setup. So the green vertical line represents that we made our profit. Eventually, you'll see if you go to the date, we only get our profit, or we earn our profit on the 8th of April 2021. For us to get our profit, price needs to come approximately to this blue line that I'm drawing. So overall, I've given you a perspective on how to go and test your strategy. So now we're going to look at the returns, which I'm sure is going to excite you. You get to see how the strategy performs and what money value or return value it gives us. So now let's head off to the table. Estimated returns for the Nasdaq 100 strategy. Now, based on what I taught you, we've managed to execute 17 trades. We initially started with an account of 330 USD. I'll explain to you how I managed to get 330 as an account to start with. You can see we averaged with a 0.01 lot size throughout all 17 trades. We've executed 17 trades, 11 were winning and 6 were losses. So we have a 65% win rate. Guess what? We've actually made positive 31.75 USD as our profit, and our average risk, you can see our risk varies, and the average is 1.85%. Now in our 17 trades that we executed, $10 was approximately the highest loss that we actually have taken. Now if you calculate $10 of 330, you'll see you get, if you take $10 and you divide it by 330 as an account, you get about 3%. Now I've mentioned in the past that my risk is normally around 2 to 3%. Let me get a nice color. Choose red. So based on this loss of $10, and we know that to have a risk of 3% on this loss, which is the highest, you can see the next highest is 9.4, which becomes 2.8% as a risk per the trade. Now if you wanted to reduce the risk, let's assume you want this value to go to 2%. If you want this value to go to 2%, you would need to take the account to approximately, I think it's $500. So you probably have to use 500 USD. Now this is very important, these numbers, because we want to have least amount of risk with maximum potential return. And you can see from our data, look at here, we took 3 losses in a row. So it's 1, 2, 3. These form our 3 losses. Now what happens if you decided to risk, like many mentors, 35%? Seen traders risk this amount. So based on our strategy and our consistent actions, we know that if this was actually 35%, you probably would have blown your account. Remember, losses are part of doing business. You can see 3 by 35% means your account could have actually been knocked out. So please make sure your risk is as minimum as possible. This could actually increase your stress a lot. If you had, let's just say 35, 40%, or maybe you don't even use a stop loss. If you chose not to use a stop loss, you probably would blow your account. So it's important to not only know the numbers, but manage your risk. So let us look at the next year returns. So this forms table 1. It's the estimated returns for 2021. I'm excited because it gives a positive yield. You can go and test it out and confirm for yourself. Now let's look at this year of 2020 with our strategy. Our results show us that we actually had a 93% win rate. Remember, this is the daily charts. So we actually opened 13 trades. We won 12 and lost 1. We took home $61 USD profit. Our average risk 1.94. You can see our highest loss is 10.4. So the $330 account is actually fair for 2020. You can see the risk is 3.2, which is fine. And you can see we grew the account from 330, we took it all the way to 391. So this is annually or 1 year, which is the year of 2020. Also take note that my account only pays 500 pips. I could potentially earn 0.50 USD, right? On other brokers, for 500 pips, the payment structure will be different. You could actually earn 5 USD. So you're going to check that out, and if your value differs, then you would have to adjust your account. If you're 500 pips, if you have to take a loss of 500 pips and you lose, let's just say $5, then your account size, you'll have to adjust your account size. You probably will need a higher account size because your risk will also be higher. Remember, 10.4 US dollars equates to 3.2% for my account. My account is this 50 cents USD account and not a $5 account. So you need to adjust your risk and your account size. You're welcome to contact me in the comment section under the YouTube video. I will answer any questions that you may have. So looking at the year 2019, we've managed to execute 10 trades for the year. We had a win rate of 60%. We only managed $8 in 2019 based on our strategy, and you can see our risk is very small at 1%. So again, 3 years of profitable results. So that's pretty awesome in my opinion. Summary: please take note that you must test the method or strategy on your own charts as many times as possible, as this will help increase your trading confidence. Knowing that the higher time frame yields less trading opportunities, you could also test this method on the other time frames. There is no guarantee that a strategy would work on all time frames. You are solely responsible for your own risk tolerance, risk management, and using this method. Consistency is key, and we must execute our trades based on a structured plan. As with any business, it will never yield massive profits all the time. You are definitely allowed to be innovative. What this means is you can use this strategy development as your foundation to create your own technique. You could also optimize the strategy by trying out other ways to increase the profit yield. For example, instead of risking or using a risk to reward ratio of 1:1, you could increase the ratio to 1:2. This means you could potentially earn double on your risk, for example, which could be $1. Testing of your strategy not only gives you increased confidence, but you also get the potential returns on your technique. Amazing, right? I will also leave my other YouTube links in the description box so that you could learn to test your technique for free using a simulator. In our case, we can use TradingView as I showed you, and then we have the other free simulator by FX Blue. I'll leave the link and show you how to use it. You could also step things up more. Once you are absolutely sure of your technical strategy, you could learn how to code it or create your own robot from YouTube, books, etc. Good luck and go well. You got this. So we've come to the end of the video. Until the next video, goodbye.